Hi, let us start with issue, forfeiture and reissue of shares. We will discuss about the accounting entry part. We have already discussed the concept. Now let us understand the entry part, how we will account for it. So first thing will be issue of shares. One by one we will try to get into all the entries here and we will understand how we, in what situation, what entry will. Now for issue, we have already discussed that normally company issue it in multiple installments. So usually it will be application, then allotment, then there could be one or two calls, say first call and final call. We have discussed this. If say our value is 10 rupees, this is application 3, allotment 3, first call 2, second call 2, this is the 10 rupees. And if there is any premium is there, let's say premium 2 rupees, so 12 rupees. So like this the allotment will be there, and also here we know that it will be first it will be received and then we will be transferring. First time money has to be received along with the application, money comes and then only company board decides that the allotment will happen and whom to allot, and they'll take the necessary approval from SEBI, ROC, and then do the allotment. Post that always it will be first creation of the due for the money and then it will be asked to the shareholders. So for all other case it will be first due creation and then receive. This premium it can be collected in any stage, at any stage, but can be collected at any stage. Usually it collected on the allotment. Usually on allotment, and sometime with application. So usually on allotment and sometime on application. Very rarely on call it's collected. So we will consider that application and allotment how it is to be treated. And whatever is treatment in allotment, the same thing can be happen in call. If it is call, you will mention that instead of allotment, you will mention it is call. Now here before the entry, I want to tell you one important point which could be coming in your theory, that application money as per Companies Act, 2013, application money has to be at least 5% of the nominal value. Has to be at least 5% of the nominal value. Let's say 500 rupees shares are issued. In that case, 5 rupees should be your application money. However, this is as per Companies Act. Now, SEBI has another rule. SEBI says application money has to be 25% of the issue price. Now again, company law says that in other section it says that with respect to issue of shares, SEBI will be the final decision maker, not the company law board. So effectively SEBI's rule has to be followed. Now for your problem solving purpose they will give the application money, allotment money. You don't have to break your head, but in theory this question may come, so you should know this. So now that we understood that how the money comes, let's make the entries. So let us make the entries on application. Now there are two entries. First it will be received, and then after allotment it will be transferred to the capital. So on application money received, so this will be your first entry always. On application money received, what will be your entry? Money received will be in the bank, so this will be bank account debit to share application account, share application account, simple entry. Now here one thing you have to mention, that unless it is stated in the problem that narration not required, you have to write the narration. I am not writing narration here, you all know how to write narration, but you should write the narration for every entry. Now once the money received, then comes to your allotment. Allotment, what happened? First the due creation. There are three activities. When the board approves, there will be creation of a due for the allotment. Application money, what is received, now for that shareholders whom the shares are allotted, the money to be transferred to share capital account. Then it will be asked to the subscribers. When the subscribers pay the money will be taken into the application allotment account. So first, so on allotment, what happened? Allotment, you have three activity. Creation of due, then transfer of application money, then receiving of allotment money. These three activity. Out of these two you can club, because these entries are happening together. You can club it and make the entry. What will be your clubbed entry? First, for the due allotment money, when you are creating a due, and basically you are transferring it to creating a liability in share capital and creating allotment money due. So share allotment account debit. Then here only we can transfer the application money. Application money already received in the application. Now application money we can debit and transfer it to share capital. Share application account debit to share capital account. Now these two entry you can pass two separate entry, but instead of that you could do it clubbed on. Unnecessary two times you will be writing, you will be extra time you will be saving, and it is allowed. So the first entry is done. This will be your second. Then on receiving you will have one entry, you will get into the bank. So then what will do? Bank account debit to share allotment account. For the money you receive from the shareholders, there could be calls in arrear, calls in advance, receiving of premium. Those entries at the stage you can club it, but we will show it separately so that your concept get cleared. Right now we are discussing assuming that it's a shares are issued at par. Then you will understand what is the premium entry, what is the calls in arrear entry, calls in advance entry. Now at this stage one more thing can happen. If there is some people not allotted the share, the money has to be refunded. So if there is any refund of application money, so in case of a refund of application money. Refund of application money, you have a simple entry. When bank goes out, you will be crediting the bank. What we have received in application account will be reversing the entry. Share application account debit to bank account. This is for refund. So we have got receiving the allotment, creation of allotment money, receiving the allotment money, and then if there is any refund on application, that is also made refund. Now what stage? Now next will be your call money, asking the call money. First you will create the due and then it will be asked from the shareholders. So on call being made, on the call made, what will happen? A similar entry like your allotment you have made. So share call money account debit to share capital account. So here you have to write the particular call, or the first call, final call. I am not writing, I am just writing particular. It could be first call, second call, final call. So share call account debit to share capital account. Now this money, once it is received in the bank, subsequently after that they will be asking the shareholders to give the money and it will be coming into the bank. So next will be on receiving of call money. My handwriting is a little bad, you have to bear with me. As I am explaining you should write it down so that you will remember it. So here bank account debit to share call account. Again this call will be first call, second call, final call, we'll write that. So this will be on the call money due. Now this is in a normal situation. You got the money, you allotted the shares at par, the number of shares what has come, full subscription, no extra you made, or if there is any some extra you have returned. Now if it is over subscription, you can have multiple situations. Some shareholders will be returned, some shareholders will be given full application money, full shares will be allotted, some shareholders partial shares will be allotted. So in that case what will be the entry? If it is under subscription, some are allotting and some are, if it is not allotted fully, you are returning refund entry same. If you are some you are allotting, the full this allotment same entry. Whomsoever you are not allotting, you are refunding. Now if it is over subscription, over subscription में you will have three situation: nil allotment, full allotment, partial or pro rata allotment. Now nil allotment, share application account debit to bank, we have already made the entry. Share application account debit to bank. Full allotment, that is what just we discussed. Now in case of partial allotment, what will happen? Partial allotment, the nil portion is given, full is given, there will be some surplus. If you are giving some money less than what is applied, to that extent number of shares they have applied, we are not giving shares, that money will be surplus, that money will be transferred to calls in advance. If it is adjusted with allotment, it will be adjusted with allotment, and after adjustment, if further money surplus is there, that will go to the calls in advance. And if it is based on the number of shares allotted, if full money it adjusted and still there will be surplus, there will be refund. So here we can mention that surplus amount will be adjusted with allotment and further calls. Any excess after that will be refunded. So there are three situations. One is adjusted with allotment, adjustment call, and then further surplus is the refund. So here what will happen? Normal allotment entry will be making. For the surplus money, what will be the entry? For the surplus money, what is there, will be transferring. So it is now there in the application money. So here application account debit to share allotment account to calls in advance account. If there is any further surplus for those shares, that will be refunded to bank account. This is the surplus amount that adjusted to the extent allotment calls, and this is a refund portion. That's why we make the allotment for in case of oversubscription. Now let us understand the treatment of securities premium account. As we discussed, securities premium either we can get in the application or in allotment or call, usually in the allotment. So if it is received with application, with allotment. If it is received with application, you have bank account debit to share application, on receiving, then on transfer, share application, account debit to share capital account, to securities premium account. This is basically the number of shares allotted times premium rate. Similarly, number of shares times application rate. This is the actual amount received. That will be your entry in case of application. In case of allotment, the entry is exactly same. Instead of application, you are getting the money in allotment. In allotment, what happens? First you create the due and then you are asking the money. So in that case, so on allotment become due, your entry will be share allotment account debit to share capital account to securities premium account. Here same entry, securities premium. First you are creating the due and now on receiving your entry will be bank account debit to share allotment account this is your in case of securities premium. So next we will discuss about the calls in arrear and calls in advance. Thank you.